Hey everyone, Mike back with another video. Today we're going to be going over 3 criteria that I normally look at when I'm trying to pick a new dividend stock. We'll be going over those later in the video. Again, not real in-depth company analysis, but just some starter points for you in your financial journey. That way you can kind of become accustomed to looking at stocks and trying to pick good deals. So without any further ado, let's get into the video. Hey everyone, welcome back. Thanks for joining us again. As always, go ahead and hit that subscribe and like button if you've liked the video content so far. Also, if you want to get started on your investment journey, I got those Robinhood and M1 Finance links down below. Go ahead and click those, get you some free stocks. Helps both of us out. So today I'm going to be talking about what I'm looking for in stocks when I'm actually trying to add them to my portfolio. As a new investor, when I started, I really didn't know where to look, and I wasn't really any kind of educated on what to look for with these companies. What was a good deal? What wasn't a good deal? How do you know a stock is trending in the right direction? So after a lot of research, these are kind of the 3 simpler dividend stock buying tips that I could give someone that's a new investor that's kind of starting out in the same role that I was. And the first most important tip I can give somebody when they're trying to pick stocks is pick a good solid company. These are the ones that we normally think of when we're thinking of good stocks. These are stocks just like you've seen in my portfolio if you watched any of my prior videos. We're talking Coca-Cola, 3M, Procter & Gamble, Johnson & Johnson. Kind of those elite companies that you know aren't going to go anywhere in the short term. Are they going to be the fastest growers? No. Are you going to lose all of your money tomorrow? No. So it's just trying to find and pick them at the right time, buy into them when they may have taken a little bit of a dip, watching their dividend ratio, to kind of see what kind of return on investment of your money you can get. We're always trying to maximize that. But with the dividend stocks, it's always a little bit safer to go for these companies, knowing that in the future, while you may not exponentially grow with the stock price itself, you are going to be recouping a little bit more within those dividend percentages that go into the growth as well. So obviously that sweet spot is finding a dividend stock that's growing out like crazy while they're raising and continuing to raise that dividend. But if you can find a stock like that at the right time, that's kind of where you're aiming for. So my first tip would be pick these good quality stocks. You can always start by Googling up the Dividend Aristocrats or the Dividend Kings. I'll toss up just a few of the companies on that list. Again, Coca-Cola, 3M, Procter & Gamble, things that you know of. And what the Dividend Aristocrats means is that they've actually grown their dividend for over 25 straight years. So it's a consistent growth. It's a consistent company, normally at the top of the game. Dividend Kings have been doing it for 50 years. You're looking at 3M, Coca-Cola, the high quality stocks there. So when I was getting started on my financial journey, that's kind of what I look for. I wanted to put my money somewhere safe that I still could make a little bit of an increase as far as the growth and the dividends, and kind of begin that snowball rolling for me. So my number 1 tip for a new investor is definitely take a look at that list and see which of those companies kind of catches your eye. Which one's products do you use? Which ones are you familiar with? Which ones do you want to kind of put your money where your mouth is, so to speak? I've mentioned it plenty of times. My dad drank a ton of Coca-Cola. The entire world drinks a ton of Coca-Cola. You can't go wrong putting your money there if it's a product that you use and that you believe in. Now, the second criteria I started taking a look at when I was looking at these dividend stocks was the PE ratio, which is the price per share over the earnings per share. The PE ratio is a pretty good benchmark when you're looking at the stock that you're researching versus other companies. So for instance, the financials should be somewhere around each other. That's how you're kind of finding a good deal. If all financials PE ratios at a 25 and you find one at a 10, well, you need to dig into that company a little bit more, maybe do a little bit more research and see why that's trending. Like, are you going to get a raging deal? Why is that ratio so low? But for the most part, I try to stick with my search anywhere between 15 and 25 right now as the market has it. And I think you can find some pretty good companies in that range. I do think the market's a little overvalued, so those PE ratios will be a little bit higher. I think a lot of them around the 25 range. So let's jump into Robinhood real quick and let's take a look at some examples. So right now, if you're looking at in the financials, JP Morgan, we'll go into that one first. JP Morgan's sitting at a PE ratio of 15.32. Now, so what you're going to want to do is you're going to want to look at the bank stocks and see how that compares. So if we jumped into, let's say, Bank of America, their PE earnings ratio is sitting around at 15.9. So they're pretty comparable, still within, kind of the S&P average range. And if we go into Citibank, which I own 10 shares of, Citigroup, the PE ratio is at a 12.98, so a little bit lower than like JP Morgan or your Bank of America. So you're probably getting a little bit better of a deal on Citibank. Of course, you have to go in and do a little more in-depth analysis, do your own analysis, of course, because I'm not a financial advisor. I'm truly an idiot that's talking out of his you-know-what here. So you can educate yourself a little bit more on these companies just by starting with that PE ratio. Something should catch your eye like this and go, okay, why is that a little bit different? And it should open up a window for you to dig in a little deeper. Now, if you were to compare these with some of those bigger growth stocks like you and I kind of have our mouths watering over, Amazon, Tesla, let's take a look at those examples in comparison with the financials. So if we jump into Tesla, their PE ratio is actually going to be 1.7 thousand, which is incredible. That means their stock is 1.7 thousand more than their earnings per share. It's incredible how much Tesla has risen. Hard to believe it's not really going to have a pullback, but people are just dumping money into it, and they value that company so much that this is where we're at with it. Amazon, by comparison, jumping into them, Amazon's at a 95.57, still very, very high, but nothing like Tesla. And we'll even bring it back down to something like Apple. And Apple's at 40.31. So it gives you a little bit of a window into a company and into the comparisons of what might be a good deal at what time. Again, do your own research on this. It's just supposed to be kind of an eye catcher. And now the third thing that I take a look at when I'm looking at these stocks, we're talking dividend stocks, so you want to look at that dividend yield. Everyone's going to want to jump on those super high dividend yields, something that's like, oh, I'm getting a 12% dividend yield. Well, the dividend yield comes into effect when you're talking about the dividend per share that's paid out per year and the share price. So as that dividend yield goes up, something is changing. Either your dividend is going up or your price per share is going down. And if your price per share is going down, obviously that dividend yield is going to go up. So if it's going up like that, you really need to take a look at why the company is possibly tanking. You see this in stocks much like ExxonMobil was doing a few months ago. AT&T is kind of like that now. They're looking at closer to an 8% dividend yield, but it wasn't always like that. Their price has dropped, 25% within the last year. Their stock price has. So that's made that dividend yield go a little bit higher, and it's made a lot of investors a little wary. And if you look at their financials and you actually dig into the company, there are some things to be wary about. This is also the case with other stocks like Altria and things of that nature. So you can't just say highest dividend yield, I want that one, because the company's financials might not be there to support that dividend payout, things of that nature. There are other criteria you have to take a look at, but the dividend yield should pop your eye open. Normally for me, I'm looking at anything from a 2.5% dividend yield up to about AT&T's my highest at around the 7.5. Good solid companies I know that are growing their dividend. Like we said, my first criteria was kind of finding those dividend aristocrats and dividend kings, kind of finding that nice little window. So let's use Citigroup as an example for me. The number one criteria that I look at normally is dividend aristocrats or dividend kings. Well, Citigroup does not fall into that. They do not have a good track record of increasing those dividends every single year. But when I was doing my research, I saw that Citigroup was kind of in this reorganization mode where they were looking at, they were kind of rebuilding everything and kind of looking to attack, and their share price had tanked well below. This is around the COVID time. It tanked well below where they were at, and their PE ratio is actually around a 6.9, which is well below the S&P average, and it made their dividend yield on cost for me closer to 5%. So again, as that price per share decreased and that dividend stayed the same, the dividend yield went up. So I got pretty good dividend yield on cost, with that deal. And then of course, everything opened back up with the vaccine news and things of that nature. So it's kind of brought the stock up and brought the dividend yield down to 3.3. in hindsight, are other banking stocks better picks? JP Morgan, for instance, probably. I still would like to get into some JP Morgan. Again, I want to kind of find that right time, maybe try to find it at a little bit of a dip. But when I had some money and some capital in my account at that time, Citigroup just seemed like something I thought I could make a little bit more of a return on the growth side, along with hoping that dividend starts to stay the same and we don't have any kind of financial crisis in the long run. And another example of one that might have kind of bitten me was Walt Disney. I bought into Walt Disney right around the COVID era hit, and I got Disney for $113 per share. And then as soon as I bought it, they canceled their dividend. So I bought the company thinking, hey, I'm getting a great stock that will grow. We know it will grow, especially with the new streaming service. I got that stock wanting the dividend as well, and they paid it biannually. They only paid it twice a year instead of 4 times a year. But then they took that away. So now I got stuck thinking, okay, well, that's not really a dividend stock. Do I want to stay with it? But, you hold on to Disney because it's Disney. I'm hoping they reinstate their dividend. And, you kind of cross your fingers that it goes back to the norm once the economy opens back up. But then Disney, with their streaming service, just the stock itself took off and kind of, gave me a pretty good return. So I'm kind of holding on to them, hoping that they kind of reinstate that dividend, like I said. So now, as a new investor, you're going to make mistakes. You're going to kind of make some decisions, and on hindsight, you're like, oh, maybe I wish I picked another company. But that's also why you don't invest all your money into, put all your apples in one basket. You want to diversify your portfolio the best you can. You want to get into several different sectors, and you want to make sure you're picking quality stocks. You don't want to put yourself into a pinch. And you shouldn't invest any kind of money you aren't willing to lose. You're still gambling a little bit. I mean, even if you're picking these high quality stocks with dividends, there's nothing to say the company has to pay you dividends. There's nothing to say that something catastrophic won't happen to make the share price tank. So you have to kind of keep all that in mind. But I think that these 3 things that we went over in this video today give you a pretty good starting point of where to begin your own research. And there you guys have it, just a few tips and metrics to kind of get you started on your financial journey and kind of picking stocks and kind of figuring out how you want to allocate your portfolio. If you have any questions, drop them in the comments. I'd love to hear your thoughts. Again, thanks for joining. Have a blessed day, and thank you for supporting. Don't forget to hit that like and subscribe.